This is the Karl Miller Show, where we talk about all things real estate, financial investments, and getting into a home you love. With over 15 years of experience, this is your host, Karl Miller.
Think you have to put 20% down to buy your first home? Most first-time home buyers don't. And getting a tax refund this year? Here's how it can help you buy a home. We'll explore these topics, so it's all about buyers today. Hey, thanks for tuning in. I'm Karl, your host. I'm the principal broker at Karl Miller Realty. We're Lynchburg's first certified full-service professional brokerage, and we're located at 7700 Timberlake Road in Lynchburg. We are your caring, competent, trusted advisors for real estate, sales, and service. If you are a homeowner or an aspiring homeowner, this show is for you. I'm also in a network of the best agents in the United States and Canada, operating with a skill and with a relational approach to meeting your needs. So whether relocating to or from Central Virginia, maybe you've inherited a house outside of Lynchburg and don't know who to call, we have got you. I want to thank our sponsor this month, Gary's Garden Center. Mom deserves the best. It is Mother's Day weekend. The best can be found at Gary's Garden Center. You know, it's Mother's Day's here. And what better way to show your love than with something mom can enjoy for many months or even years to come? Whether it's vibrant roses, stunning hydrangeas, charming hanging baskets, or large combo pots, Gary's Garden Center has got the perfect gift to make Mom's Day unforgettable. If you don't know what to get, you can also buy her a big gift certificate from Gary's Garden Center, because every mom deserves to pick out her favorites. You can visit Gary's Garden Center at the intersection of Leesville Road and Greenview Drive. Do that today. Pick up something that your mom will love and tell them at Gary's that you heard about them on the Karl Miller Show.
It's time for a new featured listing from Karl Miller Realty.
Well, we've got a listing at 601 Henry Street, and this is down in Gretna. But this house is massive. It's a 3,400 square foot, 5-bedroom, main level living house in the town of Gretna. It's beautifully preserved. It's a 1917 4-square that offers space, character, and flexible living in an in-town setting. It's got a inviting wraparound porch. Inside are just high ceilings, hardwood floor, traditional layout with a formal living room and dining rooms. You just got to take a look at this house. The primary main level suite with a private bath has adjoining office or flex space, so you got a lot of good convenience there. And then there's also a main level laundry. And upstairs, you got 4 big bedrooms, just great for guests or hobbies or multi-generational living like we talked about last week's show. It's situated on a level half-acre with a fenced yard. There's a carport. There's multiple outbuildings too. You got 2 driveways, which just gives you versatility that's rarely found in a town setting like this. And you might even be able to get some closing cost assistance with an acceptable offer. The seller wants to help a buyer get into this house. Again, the address is 601 Henry Street, and it's listed for just $364,900. If you go to karlmillerrealty.com, look for Marie Mitchell. Marie Mitchell is the listing agent on this house. Call her today. This is a great opportunity for a buyer or maybe a multi-generational buyer or somebody who needs a large house, really conveniently located right in the town as well. Well, let's talk about first-time home buyers and the amount of down payment money that sometimes is perceived as needed, and then what is reality. Google Trends recently did a study, and they found that online searches for down payment information recently hit an all-time high. So it's a clear sign more buyers this year, right now, are trying to figure out what they really need to save before making a move. So Google put out the article that their searches for down payment information, they hit a new record high, actually. And this was like the most popular time ever in spring of 2026. So question is, if you are wondering the same thing, you can always turn to the internet for answers. But, you know, a lot of time it's just as good to just ask a local expert, and we are here for that. And so here's what we would tell you about that. It is a little bit of a myth that you need 20% down to buy a house. It is a conception around the home buying, a misconception, I should say, around the home buying process. And let me kind of tell you where that kind of came from. In the history of home buying, 20% used to be required. And so the insurance, the government insurance will insure mortgages and mortgage holders for 80% of the loan to value of a house. So in the old days, you did have to put 20% down because the banks were putting their money at risk because their interest was not insured if there was a less than 20% equity in a house. So along came a vehicle in more recent years called private mortgage insurance, where private companies said, hey, investor who's doing a loan on this house, we will insure you in the event that there's a default on that bottom 20%. So typically the buyer would put 20% down, bank's money was insured by the government, and so to solve that problem, private mortgage insurance kicked in. So you as a home buyer today can definitely put much, much less than 20% down. You could get away with as little as 3% down or even less sometimes, but 3, 5, or 10% down is very typical. If you do borrow more than 20% equity in your house, you will be required as the borrower to purchase not title insurance, but private mortgage insurance, otherwise known as PMI. So it does add a little bit more to your payment by putting less than 20% down, but you don't have to put 20% down. I hope that makes sense.
And if you put, so for me, I put 10% down.
Yeah, sure.
Once you hit that 20% threshold, that PMI goes away and your payment goes down.
That is correct. If you do a conventional loan, there are some loan programs where that PMI will stay on for the life of the loan unless you refinance. Mm-hmm. There are some programs, and the best thing I can advise you to do is talk to a local lender to know what your options are for your specific loan. But I do know some programs, it is out there kind of forever unless you refinance. But typically what happens is once you get to your point, once you get to that a certain time period or 80% loan to value, all you have to do is prove to your lender, hey, look, I got 20% equity now, that PMI drops off. And that is very, very common. FHA loans allow homeowners to get in with as little as 3.5% down. There's other programs through the Veterans Administration and the USDA, also known as Rural Development Loans. Zero down payment options for qualified applicants are reality. And so it's just interesting to know. But yeah, that PMI, back to your point, does drop off, Anthony. You can drop that off after you get to 80% equity, for sure. So the amount of mortgage reports put out an article recently, and it just said, hey, the amount you need to put down does depend on a variety of factors. Okay, so not all people, not all houses, not all regions are created equal. So, but there are a variety of factors, and some of the factors involve the loan type. I would say your financial goals as a purchaser. What are your financial goals? If you don't have a large down payment saved up, don't worry. There are other options available, and you don't need to put down the 20%. That's the point here. You don't need to put 20% down. Many home buyers are able to secure a loan with as little as 3%, and like I said, even no down payment at all. And so all those options are just one reason so many home buyers are able to buy without a 20% down payment. So the question is, what are buyers actually putting down? So, if buyers, especially first-time home buyers, aren't doing 20%, what is the number? Well, the National Association of Realtors, for first-time home buyers, this is a report that just came out, first-time home buyers are putting 10% down. So that's maybe half of what you expected. But that means that if you are aiming to save 20% because you think you have to, you might be setting a timeline that's simply longer than necessary. The median down payment for first-time home buyers last year was 10%. And some more good news is that it not only that you might be able to buy with less money down than you thought, but there's also options to help you get your down payment goal even faster. And that is through down payment assistance programs. There's so many programs today that are designed to help you save for a down payment, and they can make a big difference in how fast you can hit your savings target. Unfortunately, and this is kind of what we're putting out here today, is that buyers a lot of times don't realize how many there are or how they may qualify for help. So recently we brought on a couple of local lenders on the show, talked about some grant money options, talked about some incentives that the government's putting out there, coming up with more and more all the time. And research from Realtor.com shows that 80% of first-time home buyers, 80% qualify for some form of down payment assistance but only 13% actually use it. So this is kind of where there's a big miss happening in the market right now. Would-be buyers, especially first-time home buyers, aren't taking advantages of some of the programs that are out here.
And where is that disconnect happening? Because to me, it almost seems like we've got so many programs because the government is realizing, like, hey, the first-time homebuyer median age is about 40 to 41 years old.
That's right.
We need to be able to allow young people to get into these houses. Where is this knowledge disconnect happening? Or is it that people need to already know about these programs and then come to their realtor or lender and say, hey, can I look into this program? Or is it something that the lender should be going, hey, or is it a mixture of both?
I think it's a mixture of both. And I think there's also a bit of a hassle factor. Mm-hmm. There's a hassle factor for the lender. There's a hassle factor for you, the buyer, because you have to prove that you qualify for these programs. But according to the NAR right now, there are 2,600 home ownership programs available right now. So there's just a ton of them out here, and way more than I even know about. And some of these are regional. Some of these are, just kind of a local regional thing. Some of them are state level. Some of them are federal level. But there's a total of 2,600 home ownership programs right now available. And again, 80% of first-time home buyers qualify for some form of down payment assistance, and only 13% are using it. But here's what's crazy. I mean, in 2025 and 2026 right now, there's a benefit average of $18,000 down payment assistance, DPA. It remains one of the most essential tools for addressing the nation's affordability challenges like you were talking about, Anthony. I mean, it really is an opportunity out here, and there is a disconnect. That's why I'm talking about it today, because a lot of people don't even realize there's options available.
Well, because it was like, when you had Will Looper on a month or so ago, and he talked about, I think it was called like the Heroes Grant or something like that, which was like $10,000 or $20,000 of just free money that you didn't have to give back. Yep. I had never heard of that until then.
Yep, that's right. That's why we brought him on the show. So I think my biggest advice for you, and again, every individual, it varies a little bit, but my biggest advice is talk to a local lender who's versed in the grants that are available. Find out what hoops you have to jump through, because, when you're talking 5 digits of grant money, that's worth jumping through.
That makes a difference.
I've got a daughter going into college, and she's jumping through every hoop she can to get every single scholarship and grant she can right now. And she by the way, I'm so proud of her. She was at the LSYO, Lynchburg Youth Symphony Orchestra, last weekend, and she had applied for a grant. Now, she's not majoring in music, but she's going to be in an ensemble.
Right.
And the LSO, thank you, Lynchburg Symphony Orchestra, granted her $500 of scholarship. And so all she had to do, application, here's what I'm doing, a paragraph or two, sentence, and boom, $500.
I did the same thing with our local Legion. It was the American Legion. Mm-hmm. I have one veteran in my family.
Yeah.
And it's like a second or third cousin. I have nothing else. But I was like, it doesn't say I have to be a veteran or I have a veteran in my family. I'm going to apply. And I got the scholarship.
So the point being is that if you're a student and you're willing to jump through all those, things to get student loan grants or scholarships, just imagine how much more valuable this is.
Yeah.
So jumping through a few hoops to get a scholarship in the form of a home purchase, for lack of a better word, it's a grant or down payment assistance program, especially if it's forgivable. Some of these deals are just completely free money. It's forgivable. Now, there might be a requirement that you have to live in the house for a certain time, 3 years. In fact, we talked about it on the radio, we show in the past, we sold some houses that the town of Alta Vista was building recently, where the town of Alta Vista was giving grants, and this was significant. This was like $60,000 of grant money to a first-time home buyer. Now, the rule was you had to live there for 10 years, or if you sold it within 10 years, you had to sell it to another owner-occupant who also qualified for the same grant. So there was some income limitations around it. But my point is this: $60,000 of free money to buy a house. Yeah. Are you kidding me? Like, it just makes it's a no-brainer.
And even then, think about what $20,000 does to your payment.
Absolutely.
I mean,
it drops that, significantly.
Especially, like, I'm going to reference the Heroes Grant again.
Yeah.
That's one you don't have to pay back. So it's just $20,000 that you just get.
Free money.
You can use whatever money that you were planning on for a down payment or whatever to get furniture or, put down towards a couple payments. And then you don't have to worry about that stuff. I mean, that is all so big.
Yeah, there's no doubt about it. So I think the best advice I can give you is research them a little bit. You can go online and research, but also get connected with a local lender who knows the local grants available. We talked about, you just mentioned the one from one of our local lenders here in town. Loopers have the Hometown Heroes grant, but there's others. There's others available too right now. Lots of them available right now, to be honest. So get connected with a local lender, ask about them. I just had a first-time home buyer reach out to me this week saying, hey, I've heard there's some down payment assistance programs available. I said, absolutely. And I got him connected with a local lender, and this guy's young. He's under 20 years old, and he is fully intending to buy his first house this year. And God bless him. I think it's amazing. I think it's just fantastic.
I felt like I was so ahead of the game when I got my house at 25, and then you hear that, and you're like,
Last year we had two 18-year-olds that bought a house.
That's wild.
In Lynchburg. Yeah.
That's so impressive.
It is impressive. And I don't have many regrets in life, but one of them is that I didn't buy my first house sooner. And I bought my first house when I was 29. So, it wasn't like I waited until I was 40 or anything like that. But I actually could have bought a house when I was much younger, and I just chose not to. So that's one of the things I look at. It's like, man, how much further ahead financially would I be had I bought my first house at 20 or 21 as opposed to 29? Hey, when we come back, if you're getting a tax refund, we're going to explore some ways that can help you buy a home. Welcome back to the Karl Miller Show. I'm Karl, your host, principal broker at Karl Miller Realty. You can follow our social page as Sierra. She's our creative director. She puts out fun, engaging content. At Karl Miller Realty is where you can find us on Instagram and Facebook. If there's a real estate question you want answered, engage with us there. I'd love to get your question on air and help you get where you want to go and make sure you can make an informed and confident decision.
It's time for Karl Miller Realty's Local Stat of the Week.
Are prices going up or down in Greater Lynchburg so far in 2026? Well, Q1 data is in. The median single-family home price in Lynchburg and three touching counties is $320,490, so $320,500 rounded off. That is up 2.8% year over year from Q1 of 2025. By the way, the median size of the typical home that sold had 1,900 square feet, and it was on the market 19 days before going under contract. Here's a question for you, I guess. Did you sign a lease last year? If you choose to rent one more year instead of buying, if you chose that last year, you missed out on $10,000 of equity gain on your house. All that you didn't get this year as a tenant. Well, this means if you bought a median priced home last year and you put $30,000 down on it, so about 10%, you just gained a 33% cash on cash return in 1 year. Think about it, put 10%, $10,000 down. $30,000 down. The market's up 10%, $10,000 on a median price. That is a 33% cash on cash return. Buying a home continues just to be a strong investment for Greater Lynchburg, and we can help you become a homeowner this spring, and we would love to do so. You can call us today. So speaking about becoming a home buyer, if you're getting a tax refund, here's how I can help you buy a home today. If you're getting a refund, that money could actually help you get closer to buying a home. It may not be something you factored into your plan yet, but it can give you savings and a boost where you need it most. So here's what the IRS is putting out this year, is that this year, 2026, here's the good news. On average, people are getting more money back in their refunds than they did the previous year. The individual's average refund is 11% higher. So 2025, the number was $3,170. That was the average individual refund last year, $3,170. And this year, it's up 11%. It's $3,521. Your refund's going to vary, of course, but any extra money is a good thing, especially when affordability for housing is tight, as we've known. We've been talking about this for a long time. So here's how you can put that money to work. Here's 3 ways you can use your refund when buying a home. And first of all, you can put it towards a down payment. Data shows saving for a down payment, like we just talked about, that's the first and biggest hurdle for a lot of first-time home buyers. We just talked about this last segment. You can use your refund to help you build that down payment fund up faster. And again, like we talked about, you may not need to put as much down as you think. Number 2, you can use it towards your closing costs. And we didn't talk about that in the last segment, but closing costs, you as the buyer, you're responsible for all the costs associated with buying a home. So costs include the lender origination fees. There's fees like appraisal fees. There's things like the home inspection expenses. There's things like grantor's tax or grantee's tax in your case. And there's also, the attorney's fees and the title insurance. And then don't forget, you do need to prepay for some expenses like a year's worth of homeowner's insurance, typically if you've got a lender involved. You'll also need to prepay a certain month's worth of real estate taxes. So the closing cost will range from 2 to 5% of the home's purchase price. So your refund can go towards your closing costs, which makes things feel more manageable on your closing day. And then the other option you have for your tax refund is, you can buy down your mortgage rate. You have the option to buy down your mortgage rate by paying a little bit more up front. It's called points. You pay down points, and that you get a little bit more upfront dollars up front, but then you get a lower monthly payment as a result of getting a lower interest rate. So some people, they're just trying to make the numbers work. They're trying to hit a certain payment number, and sometimes by spending a few extra $1,000s on the front end, the interest rates comes down, the payment gets lower, and you can hit the budget by putting money down up front. So it's kind of a couple ways you can use your tax refund to get into a home, maybe sooner than you thought.
Yeah, I've heard the people say that, hey, it is really good if you can go ahead and get ahead if you've got extra money and you can just chuck it at your mortgage.
Right.
To have you get those points and kind of help you out in the long run. Yeah.
The other thing, too, that's really nice about tax refunds especially is it's documented. It's documented income. You have to be careful sometimes where you get your down payment from because the lenders, they want to see that the funds that came in legitimately, right? Yeah. So we had this happen recently where a client, what happens when you get a house is the bank, the mortgage company, when you do your application, they will go back and look at your bank returns. They'll look at your bank statements, I should say. And what they don't want to see is the series of undocumented deposits. Mm-hmm. They want to make sure you're not doing things illegally. Yeah. And that you're taking out loans, undocumented loans. They want to make sure you're solid to buy a house. So we had this happen recently where a client did a yard sale and, dropped in several $1,000s of proceeds. Again, all legitimate.
Yeah.
But when they looked at his 60-day statement, they were like, oh.
Where'd that come from?
Where did that come from? And they had to go back and basically document where it came from. And fortunately, the underwriter accepted the explanation. It wasn't like he was dropping in $2,000 every 3 weeks, which would maybe indicate some other type of activity going on. Yeah. But yeah, so you have to be careful about that. But I think the point being that I want to share in that story too is if you're a first-time buyer, you're a would-be first-time buyer, you're in a lease, you want to get out of that lease, you want to become a homeowner. In addition to using your tax refund, in addition to using your Christmas bonus money or maybe your extra little bump you got in a commission for extra work or whatever, look at other ways to get your down payment saved up. And having a yard sale, seriously, is a way to do that. Maybe you've got that baseball card collection or your coin collection or you've got something you can sell. Like it's just, hey, it's not bringing me joy anymore. It's just, I'm kind of past this era of my life, but I've got a little bit of an asset here. Maybe it's just a couple $100s. Or you've got some used sports equipment, that you just got, hey, I'm never going to use this again. Look at what you could liquidate and trade that asset, if you will, into a better asset, an appreciating asset in the form of a home.
Well, because every little bit of something will pay for something.
Absolutely.
In that scenario, it's like you said. Those closing costs have got to come from somewhere.
That's right.
Those are fees that are going to be there regardless of what happens, unless you were able to, I guess, negotiate out of them.
Right.
And have the seller cover those costs.
Right.
But those costs are going to be there.
They are. Other ways you can work on your down payment, guys. Look at maybe even just getting that second job for a little bit. Again, it's short term. We sometimes short term pain is worth it for the long term gain. So, the cool thing is if you have a car right now, you can earn income doing all kinds of stuff. From Uber Eats to door dashing to Uber to all that stuff. Just for example, I'm not. It's springtime right now. There's a lot of people looking for extra work around their yard, around their house. There's a lot of good opportunities right now just to go out there and do a little sweat equity and add some value to your neighbors and get paid for it. So there's ways like that you can just do some, again, short-term pain, long-term gain. I would look at your basement, look at your garage, look at your attic. Look at the stuff maybe still at your mom and dad's house, even if it's in another state, that might be worth several $1,000s that's just sitting there, not doing any good for you right now. Look at that. Maybe you could liquidate that. And then don't forget as well, and we talked about this on the show, it's okay to even ask a family member for some down payment assistance in the form of a gift funds. This is a big thing, and 54% of first-time home buyers receive some assistance from a family member or down payment assistance recently, and in the homes that were purchased last year. So don't be afraid to go out and ask for maybe some help from a family member, because I think if you can showcase them the value it brings to your life as a tenant, how you want to get ahead of that rat race and get ahead and start building your equity and not wait till you're 40 years old, which is the average age of a first-time home buyer today, it's worth looking at those options as well as a first-time buyer.
Or as we talked about in the last show, just ask them to move in.
Just ask them to move in. Yeah, the multi-generational thing, sure. But, I think even multi-generational can go a different direction too, and that is bringing in a roommate, bringing in a friend, or, if we've got some clients that are fresh college graduates, from the last year or two, but they still have friends in nursing school or in law school, and couples, right, that don't have a lot of income. They don't have a job yet, but they have the ability to pay for housing because they're going to buy housing somewhere.
Yeah.
And we've got clients that have a basement apartment and they've got their buddies in the basement.
I mean, I bought a 2-bedroom house. It's just me, but I bought a 2-bedroom house because I liked the idea of a guest room. I've had several friends who've been like, oh, I'm thinking about, and I'm like, look, if you need a place to stay for 6 months,
yeah,
$400,
sure.
$500,
Yeah.
you pay half the mortgage, or
right.
you pay a couple of my bills.
Yeah,
we're good.
Exactly. And again, you got a time limit on it. You're not asking to move in with you for the rest of your life. There's a time limit, and it's a real. My son's doing the same thing. He's out in a metro area. He's out in Denver, which obviously much higher pricing.
Yeah.
And he took a little bit of a risk. He signed a $2,800 a month lease on a 3-bedroom house, but he's got 2 roommates now, subsidizing his rent payment.
Yeah.
And so he's kind of being a little bit of an entrepreneur out there, he's not making money, but it significantly reduced his housing expenses.
Oh, yeah, 100%.
And he doesn't mind having roommates. Now, it doesn't work if you night shift or you don't want to have roommates. That doesn't work. But look at house hacking in that way. It's certainly an opportunity to go that direction and help you pay for your house. So back to this whole conversation, a trusted real estate agent, trusted lender can help you map out what you need, what your options are, how to make the most of what you already have, including your tax refund. So if buying a home is on your radar, don't overlook the tax refund. It could be the extra push that helps you get from there, almost there, to actually there. So we're happy to talk to you too, help you to explore your options with that.
It's time for Karl Miller Realty's Fun Fact of the Week.
If you've missed part of the show and you want a recap, hey, we've got you in that too. You can catch full episodes of The Karl Miller Show on Spotify anytime. It's the perfect way to stay in the loop, revisit key moments, and listen at your own pace wherever you are. And if you have questions you want answered, contact us, hit our social media platforms, or give me a call. I want to thank our sponsor, Gary's Garden Center. Spring is here. It's Mother's Day. Stop by, get something fun for mom, add some spice, add some color to your life. Lots going on over there at Gary's Garden Center, located at Leesville Road, right at the corner of Greenview and Leesville. And that is where you can visit them today. Great selection out there. Hey, thanks for listening. We are your local, caring, competent, trusted advisors for real estate sales. Contact us today for any of your real estate needs. Have a great weekend, everyone, and we'll see you next week.